This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. You know you make it in economics, Paul, when you have your own website. Mm-hmm. You know, Bernanke doesn't have his own website. Powell doesn't, you know. I mean, Ken Rogoff, I don't think does. Claudia Sahm does. She's large. Why is she large? She's been hugely influential this year in a discussion of the gloom of recession. And she is intelligently and day by day, tick by tick, pushed against the gloom of the financial zeitgeist. She said it's wrong. I'm going to give you one paper. It's on her beautiful new website, Claudia Sahm, and it's like one word. You know, they squeeze it in. It's like she hired a consultant to do that.
That's right.
You know, don't say Claudia, don't say Sahm. And I love this paper from 11 years ago. Shapiro, Sumrad, and Sahm, check in the mail or more in the paycheck. Does the effectiveness of fiscal stimulus depend on how it is delivered? That's where we're going to go with Claudia Sahm. Claudia, good morning.
Good morning. Thank you.
How'd your website go? Was it like pulling teeth to get a website up?
Oh, no. I had the very best helping me get it up. So I'm very excited. So Sahm Consulting, it's all legit now.
It's beautiful. It's simple, beautiful, and it really puts forward our intellectual input. This triple pandemic stimulus, I'm going to put it in three waves. Are we through it? And is it going, like you and Shapiro wrote about years ago, into our paychecks? Is a stimulus why we're having a roaring 20s?
Throughout this cycle, I have been a fierce advocate for the stimulus checks, particularly with the rescue plan. And that came from research. The paper you cited, this is peer-reviewed, well-cited, looking at, does it matter how we get money to people? Stimulus checks, or like what Obama did, little dribs and drabs and tax credits, you know, both make sense. But when we really want to get it cranking, give people money, give it in a good slug, let them get spending, let's get the jobs back. And for a lot of reasons, I mean, in a lot of ways, we did big fiscal. Those stimulus checks, they mattered. And we are enjoying a recovery that, frankly, even I, as the real optimist on big fiscal, I'm like, wow, this is good.
Yeah, we saw a GDP print that just kind of came in a week or so ago, well above expectations at 3.3% here. If I'm the Fed, I mean, there's an argument to be made that inflation is tamed, economy's doing okay. I see in one of your recent notes, you say the Fed is afraid. What do you mean by that?
Well, the Fed's always afraid. They don't want to make a mistake. We're kind of hard on them if they do. No, to me, and the argument's been made, Chris Waller, Boston, that, we have the luxury of time. The economy is really strong. We can wait and see what happens with inflation. And Frank, I absolutely firmly disagree. They do not have the luxury of time. They have a dual mandate. And once we are headed towards it, and we definitely are headed towards 2%, they need to start cutting. I'm not looking for 200 basis points on Wednesday. It's just like, let's get going. Like, so you can do this gradually and carefully. And yet the demons of the 1970s with Arthur Burns cutting, then inflation got out of control, and it was an election year. It's like, oh, wow, here we are. So I expect them to really drag their feet, and we better get real lucky that financial markets hold it together until the Fed starts,
Exactly.
There's your stock report. That's your stock report for the day.
We better hope we get lucky.
Market strategist Claudia Sahm.
Yeah, sorry.
We got to get really lucky here.
So, Claudia, I mean, I'm looking at the WIRP function here, it's kind of the world interest rate probability. Still looking for, 5 or 6 cuts this year. How do you view that?
I hope they're right. There's a lot of daylight between what I think the Fed should do, and that's they should start cutting right away, and what I think the Fed will likely do, and that's starting at the earliest in May. And obviously when you start is going to make a big difference on how many cuts you do for the year. So I think what's most likely is something closer to 4 cuts, take a percentage point off. And yet, markets have pushed the Fed around before in this cycle, so it just might get it.
The Bloomberg Financial Conditions Index, folks, the word is, I'm using this judiciously, massively accommodative to show where they are. Claudia, on the debt and the deficit issue, and it's an angst of all of our listeners on CarPlay, Apple CarPlay, and all of you watching on YouTube, Bloomberg Podcasts. Claudia Sahm, it's just as simple as this. Joe Stiglitz says you can do all this fancy debt and deficit, but you got to have an underlying growth rate to solve it over time. Do you have a confidence with the new boom that we have an embedded underlying growth rate that can extract us from this debt crisis?
I wrote a piece recently for Bloomberg Opinion about this question of the deficit, the debt. Should we be worried? I come down in the place of no, we should not be on a lot of we're in a good place financing the debt. Things are, and as you said, we're in a good growth position. I mean, I don't ever want to say we're going to grow our way out of the debt. I think that's too optimistic. And yet what I say is step back, look at the context. What are we doing with all of this government tax and spend policy? And that's the conversation we should have is bottom up, not get obsessing over some top line number. And yet I will absolutely affirm Stiglitz that this growth piece is so important. And these productivity numbers we've gotten, which, productivity can disappear on us. But if we even get a 0.25 percentage point on trend productivity growth, all sins are forgiven for any mistake made in this cycle. So that's so important.
That is the economic insight today, Paul, how Dr. Sahm there went to such a narrow incremental growth. People think you got to have a ginormous growth. Even just a little bit of a growth gets it done over 10 years.
Claudia, the conversation when we had the Fed pivot late last year seemed to really migrate from, is there a recession in the scenario to, I guess the consensus was, very much a soft landing. Is that where you are? Are you think that this Fed is just about done its job here in negotiating a soft landing?
I've been calling a soft landing this entire time.
Yep.
That inflation was, in fact, dare I say the word transitory. We don't need to argue about that one today. But inflation went up. There was a lot of COVID disruptions. Then Putin showed up. He caused a lot of disruptions. And we got many things under control, and inflation has come down. I don't give the Fed a whole bunch of credit for that. They're in the mix, and they needed to be in terms of, going after the inflation that surged in 2022. And yet everything, I am still a purist. It is until we get inflation 12 months on 2%. I'm not calling the soft landing here, but wow, we can see the runway, right? This is just, we're so close. And this was not supposed to happen. And it happened.
How ex post is the Fed right now? Ex post, folks, is after the fact. Ex ante is it's what the media wants. The financial media wants them to get out front. Yeah, right. There's no history that they do that. But I mean, what's the level of ex post here? Is it Claudia, is it like Richard Timberlake in the Georgia School, which is they're going to wait and wait and wait and wait? You mentioned Arthur Burns earlier and the political soup he had to live in. What's their level of ex post right now?
They're going to wait as long as humanly possible. And that actually might hit them pretty soon. I mean, the 3-month changes in inflation, the 6 months, I mean, they're at 2. Of course. Well, so they really got to get going. We can still have some turbulence. We can have some bumps in the road. Yeah. And yet the stories they're telling about why they're not so sure about inflation, it's I don't know.
We got to run. But can you tell me what Jerome Powell does with Dow Jones Industrial Average round number 40,000? I mean, that alone has to change his strategy, right? A boom like that?
No. Oh. It's all about the dual mandate. I mean, frankly, the wealth effects aren't that big in terms of going into the Fed is on the real economy, and it's good.
It's great because when she disagrees with me, we can just hang up on her. Claudia Sahm, thank you so much. Just treasure it.
Thank
Claudia
you.
Sahm, with all her work at the Federal Reserve and, of course, out of the University of Michigan. Joining us now, James Stravidis, with a blistering essay in Bloomberg Opinion, made more blistering by his public service to the nation with the United States Navy. Of course, his effort as Supreme Commander of NATO. We're thrilled that Admiral Stravidis could join us this morning. Jim, I want to go to your wonderful book, The Leader's Bookshelf. Folks, I'll put it out on Twitter and LinkedIn. He sent me a royalty check once.
Oh, nice.
I mean, I've sold so many copies of this. I mean, Stravidis is thank you. The Leader's Bookshelf is brilliant. It's 40, 50 chapters from military experts about the book that changed their life. including, for example, a Connecticut Yankee in King Arthur's Court. Here's the first sentence. Are the very best leaders born or made? Admiral Stravidis, do you have confidence in our leadership after what we've witnessed in Jordan?
I'm worried, let's be honest, because what we're doing is not working. And we see in the world of business the concerns we have about Houthis attacking shipping in the Red Sea, driving prices of oil and goods. We see terrorist attacks against Israel. We see most recently, Tom, as you allude to, the attack that killed 3 brave American servicemen and women in Jordan. So we are not deterring Iran. What the article I wrote for Bloomberg Opinion does is sketch out a campaign that we need to undertake that I am hopeful will ultimately deter Iran.
Paul wants to get into that, but Jim, you've been so far out front on a game theory basis, and folks, a cliche is expect the unexpected, but you have stated that in our complexity of military force, technology, and politics, that it's the unexpected, like mixing up drones coming in or out of a base in Jordan, it's the unexpected that will kill us, that will harm us, that will put us at risk. How do we defend against the next unexpected?
For starters, Tom, we look back at history and identify those moments, those hinge moments in the case we're discussing of military operations. The Battle of Agincourt, where English longbowmen slaughter French knights in their supposedly impervious armor. Pearl Harbor, where we are stunned by a Japanese surprise attack. We look at those hinge moments when airplanes, radar came on the scene and changed everything. We are in that moment now, and we're talking about the Middle East, but I would argue equally so what's happening on the battlefields of Ukraine. So A Connecticut Yankee in King Arthur's Court is a book about innovation and leading through these kind of pivot moments. We are definitely in one where technology and security are coming together.
Admiral, I want to go right to your Bloomberg Opinion piece yesterday because it had such an impact. I'm sure it had quite the impact in Washington, at the Pentagon, at the White House. But basically, the summary is, from your opinion piece, a deadly drone attack that cost American lives requires a swift, precise, and meaningful military response. Could you summarize what type of response you think this attack warrants?
It's kind of the Goldilocks phenomena, Paul. In other words, we've been trying to curtail this by pinprick attacks, by tit for tat, small beer. At the other end of that spectrum is whistling jets overhead Tehran. I don't think we're there yet. We need to be in the middle, that Goldilocks place. And here's what it includes: cyber attacks, better intelligence collection, going after Iranian assets, but not inside Iran yet. We can still go after the Iranian Revolutionary Guard at sea, ashore. They are training, organizing, equipping, and directing Houthis, Hezbollah, the Iraqi Shia who have killed our American soldiers. We need to go after Iran directly, but not yet inside Iran. That's the essence of the article.
And Admiral, I know you said even suggesting perhaps a 5 to 8 day concerted campaign. What would that campaign entail in your estimation?
I think we'd bring a second U.S. aircraft carrier back into the region. Recall we had 2 there right after October 7th. We pulled one out. Iranian bad behavior continues. So maritime assets. We have a lot of air power in the Gulf, in Qatar, and the base near Doha, Al Udeid. We would bring more refueling aircraft, more fighter jets, bring our allies into this, and then it would be, I'd say, 1 to 2 weeks of sustained bombing against Iranian targets, again, outside Iran at this point. And then finally, Paul, we would be preparing the battle plan if we have to go inside Iran. Let's hope we don't get to that point. I think the Iranians would back down in the face of a a truly strong U.S. response.
James Stravidis, I want to go to Brett Crozier, a captain in your magnificent book. Folks, I can't say enough about To Risk It All, 9 conflicts in the crucible of our leadership in the Navy. Yes, it has admirals in it, but as Stravidis does, there's a lieutenant commander in there as well, and a cook, third class. I love that. Let's go to Brett Crozier, and this is the reality of his career ended with COVID and the uproar and the Theodore Roosevelt. But tell us about Brett Crozier as a kind of preparation, James Stravidis, that we need if we're going to take on Iran.
Brett Crozier, fighter pilot, also a superb targeteer. He worked for me as a captain, selecting the targets we struck in Libya. So a consummate combat pilot and operator, also a terrific leader. He, unfortunately, and with bad luck, became the captain of an aircraft carrier at the very beginning of COVID. He sacrificed his career to protect his crew. He's someone extremely admirable. And if you read the story of Brett Crozier in To Risk It All, you'll see how we can and must take care of our people while we conduct these kind of combat operations.
Are we too extended? Ian Bremmer in Eurasia Group, Admiral, had a spectacular chart on the dispersion, including reservists from Georgia, across all of the Middle East. It's almost as if the Bremmer worry in his top risk came due. Are we too naive in our unprotected dispersion across a broader Eastern Mediterranean?
No, I think this brings us back to where we started this conversation, Tom, which is to say, if we recognize the technology of the moment and are aware of it, we can do a better job defending ourselves. Point one. Point two, a lot of this can be done from the sea. Our carriers are invulnerable, essentially. And point three, we can fuse together the work with our allies, partners, and friends in the region. So we're not alone and afraid out there. We are with allies, partners, and friends. We need to leverage that in a better fashion.
Admiral, again, I'm just going to reference your opinion piece from yesterday. And again, you can read it on the Bloomberg terminal. Certainly, and you can go to bloombergopinion.com/opinion, bloomberg.com/opinion to find it on the website. Do you believe, Admiral, that some of the steps and policies you laid out in your opinion piece, does that have a welcome reception with this administration, with Congress?
I think it will. And as usual, with any issue in today's America, there'll be plenty of folks who are advocating very radical, go downtown Tehran tonight kind of strikes. I think that's premature. We might get there. Let's hope not. On the other side, there will be those who say, just pull out of the Middle East, let all of that just fall apart. I think what I've laid out is something in the middle that makes sense, that will avoid a wide regional war, but will cause Iran to back down.
Okay, Admiral, we're running out of time here in a bit. I want you to sell right now to this nation, and everybody's listening, the one guy in Congress that actually probably can talk about this and calm down the Let's Bomb Tehran crew. And that's the senator from Rhode Island, Jack Reed. How important is Jack Reed in this debate?
Well, I love Jack Reed because, first of all, he's a man of normal height, about 5 feet 5 inches tall, my height. Number two, he's a military guy. He's a veteran. He went to West Point. I'll forgive him that. He is at the top of the list, Tom. You're absolutely correct in his strategic vision, his understanding of the balance we need to strike here. And I think the more we listen to the Jack Reeds of the Congress, the better our chances are of steering through these rough waters.
Where we are now as a nation, does it have elements that you and Elliot Ackerman wrote about in 2034, my book of the summer, Paul, a couple summers ago? What's so frightening, folks, about the book 2034 is the unexpected. Are we getting elements of that right now, Admiral Stravidis?
100%, Tom. And we've talked a lot about drones, unmanned, new uses for unmanned surface vehicles on the sea. All of that is happening. I would argue the next step is going to be the addition of artificial intelligence to how those unmanned systems are used. That's what we need to be looking ahead toward and think, how can we reverse engineer it and stop it?
James Stravidis, thank you so much. Folks, I'll put it out on Twitter, LinkedIn, the Leaders Bookshelf. He's upset I'm selling this because he's got 14 other books after this, but the Leaders Bookshelf shelf, absolutely iconic as well.
Yep.
Admiral Stravidis, thank you for that briefing. What's great about Nadia Lovell and all of her, efforts with us is she really nailed the market. So she's looking at the Hinckley picnic boat, the 37S.
Nice.
It's like a nice boat. It's got the little jetty thingies out the side. Nadia, I can just see Nadia Lovell with a beverage of her choice in her hand with the Hinckley picnic boat this summer. And of course, the name of her boat is the heart of her work. Is why she's in the market and you're not. Do you know the name of her boat?
What?
With upside potential.
Yes,
I mean,
exactly.
that's the name of the boat. Nadia, you have absolutely killed. You got to be in the market. Why are you still in the market after the October run we've had?
It's the economy and the earnings potential that is there. I mean, you saw that the economy continues to defy expectations. I mean, we had strong GDP last week, and sort of this question is, can that continue? And is this immaculate disinflation for real? I mean, we'll get more data, when we get CPI on February 13th, and of course the seasonal adjustment, but we think that it is. I mean, we do think the economy will slow,
right?
But we think that it returns more to trend line, about 2% GDP growth for this year. And that's a positive for the markets.
Right. Top of the income statement, what does nominal GDP do? How does that fold into revenues? If I've got to give an organic revenue growth of 6%, what's the new organic revenue growth look like out 1 year, 2 years?
I mean, for us, we're looking for, in terms of EPS growth, we're looking for 9% for this year. And we think that 2025 can also produce a similar sort of EPS growth for the markets. Again, a lot of this is going to be contingent on the consumer. I mean, if the consumer continues to hold in there, so will this economy, and so will the equity markets. The consumer still has a fair amount of excess savings, Tom. I mean, nearly $1 trillion. And if you sort of do the math behind that, 50 billion or so burn rate, that gives the consumer a pretty healthy cushion for a year plus. And so that's still a lot of firing power that the consumer has over the next couple of years that should be able to support corporate earnings.
So, Nadia, a lot of folks are suggesting here, as we think about maybe broadening out the performance and participation of this market beyond kind of the Miracle 7, if you will, that maybe 2024 is a year for small, mid-cap stocks. Is that something you're talking to your clients about?
It is, and it doesn't necessarily mean that the tech portion of things get left behind. It just means, as you suggested, a bit of a broadening out. And we think that there's a place in the portfolio for small cap. When you think about the favorable macro environment that's there, remember, the Fed is on course to cut this year. And last year, 2023, was a year where people were concerned about the balance sheet for small cap companies, given that they do have nearly 50% or so of their debt in floating rate. And so as, rates come down this year, that should help small cap. And then we also are seeing some recovery on the manufacturing side. I mean, last week we had pretty good numbers from the flash manufacturing PMI reaching a 15 or 16 months high. And we're also starting to see finally new orders back in expansionary territory. So that should be incrementally positive for small cap. And then valuation, less of a concern in the small cap space, really trading at that discount. So we think that it will be paid to be nimble around adding some small cap to portfolios this year.
Yeah, you mentioned valuation. I kind of wanted to go there just generally speaking, because we had such a big move higher in the market to close out 2023, and we've continued a little bit here in January. I'm not sure I've seen earnings go up a commensurate amount here. So multiple expansion here. Is this market getting a little long in the tooth in terms of valuation?
Well, I think it depends on, whose earnings you're talking about,
Yep.
right? Yes, broadly, 2024 estimates have come down slightly, but not anything too alarming. I think what you have been seeing, the momentum and the staying power on the tech side. So from valuation standpoint, we think that even when you strip out sort of the Magnificent Seven, I mean, valuation is a lot more reasonable. And if the earnings can pull in there, some of these companies can grow into their valuations. So we're not overly concerned about valuations at this point. We think that the strong economic environment and rates coming down will be supportive to valuations.
How do you treat, I don't want you to talk about individual securities. I understand the rules of the road here. But Nadia, on a broader Magnificent Six, and I get the story. You're going to tell me there was multiple expansion last year, blah, blah, blah. Microsoft's enjoying a 36 PE forward if they deliver the goods today. How do you put a 36 multiple into a retirement plan?
Well, let's talk about how tech has performed over the last decade plus. Exactly. Most of the market returns is coming from that sector. And so that's why it is important to have that sort of exposure, despite the fact that you might have questions around valuations in the portfolios for retirement plan, because that's where the growth ultimately is coming from. When we sort of look forward to mega cap tech earnings this week, we know that it was key and important for market sentiment. And so what we'll be looking forward to hearing from is, the continuing stabilization in cloud rationalization. Is that behind us? It does seem to be the case. And also AI monetization, when we think about the productivity gains over the coming decades. I don't think that you want to miss out on that in any sort of retirement, but that is going to be key for these companies going forward in the broader economy.
Nadia, aside from tech, what are some of the other sectors that you're talking to your clients about that might be good performers in 2024?
This year we're really focused a lot on quality, not necessarily specifically sectors. Sector-wise, we still have some exposure to energy, which has seen a lot of volatility recently, just given where oil prices are, and oil prices are not even responding to the heightened geopolitical tension because there's concerns about oversupply in the market this year. We still think that there will be a deficit in Q1, so we do think that there are still some tactical opportunities in energy. But beyond sectors, like I said, quality is key because quality transcends all sectors, and we want to.
How do you define quality, Nadia?
Oh, that's a great question. And so
you never say that to me. You only say, Nadia, you only say it's a great question to Paul. I get no love. Continue.
But when you think about quality, we know it's used very broadly and sometimes loosely, but we're focused on free cash flow, profitability when we think about quality, and return on invested capital. And you can find quality companies across many different sectors.
One final question. What's the analog? I don't think there is one, but the tech boom now to the tech boom of 2000, 2001, when it collapsed, does that give you any angst?
It doesn't, because I think what's a big difference here, you have profitable companies that are invested and expected to monetize AI. So we don't think that this is a bubble. In fact, a lot of our tech analysts, including our tech analysts in Asia, has put pen to paper and recently raised its expectations for AI revenues globally. At over $4 billion by the time we get to $400 billion by the time we get to 2027. And so I think that's the key difference. You're seeing profitability already, and revenues already around AI. Unlike during the tech bubble where everything's just sort of went up, despite the fact that you might not have been profitable.
Nadia, thank you. Nadia Lovell is with UBS Wealth Management, their senior U.S. equity strategy. And it is the front page headlines. She was going to go to the San Diego Tribune this morning, but she backed away. What do you got, Lisa?
I got the Wall Street Journal. That's where we're starting. You guys have been talking about this a lot this morning. General Motors feeling pressure from dealerships to make hybrid. So it's this back and forth between electric and hybrid. So the company topped expectations. We heard about that, but they're telling the Journal that the dealers, they serve on these advisory committees for GM, and they're worried about losing customers like Paul, who are not ready to make that full switch over. But GM, they're listening to their concerns, but they haven't made any future hybrid commitments. Would you have gone hybrid, Paul?
I don't. It's definitely an option. And Matt Miller, who is our car guru, he said he would do a hybrid. He thinks that's the best way to go at this point until you get a more built-out charging system out there.
I sat at the Detroit International Auto Show with Ken Pruitt. I'll say 12, 13 years ago. And the head of Mercedes said that the major engineer guy, he wasn't like the CEO, he's like a real auto guy, said, Tom, hybrids. They were way out front on this. And it's a major, major call. And I guess with Mari Barr at 10 a.m., we'll learn about this as well. What's next?
All right. New York Times says President Biden's aides, they're drafting up this wish list for potential endorsements, and it includes Taylor Swift.
Has she already come out and said something or no?
Well, here's the thing. She endorsed Biden in 2020.
Oh, okay.
Last year, she had a single Instagram post of hers, led to 35,000 new voter registrations. That was just from a single post. So you see the influence.
I don't buy it.
279 million Instagram
Doesn't she write songs
followers.
about guys that are losers?
She does. But you think about it. She gets the younger vote too. I mean, not that young, like the young kids, but but she also gets the moms who are a fan of Swift now.
I guess turnout. I'll give her and others like her. I guess maybe they can boost turnout. But do you think they decide someone's vote?
I can't imagine. But they've been doing endorsements since the beginning of time.
Okay.
Does it matter if a newspaper endorses somebody? And back in the day, that was important,
you're right.
but I'd less so today.
Yeah, well, maybe we'll see President Biden in one of the world tours coming up.
Look for a full coverage. Joe Matthew will weigh in on this today with Kaylee Lyons. No question about it. What's next?
All right. This is a big one. Chiefs 49ers tickets at an all-time high for the Super Bowl, $9,800.
Do we know what a minute costs yet?
I don't know. No, it's going to be. No, that's a good. I have to check what the ads are. Several $1 million for a TV ad.
Yeah, for like a 30-second.
Yeah,
can I just say, and within the madness of all this, if you want just to fall back into laughter, go to YouTube, and they'll have like the 10 funniest commercials from Super Bowl 2018, whatever, and there are some just jewels of comedy in those important ads. It's amazing.
Yeah, it's a lot of folks are still. That's their advertising buy for the entire year. They put everything into it, and it's got to want
E-Trade now owned by Morgan Stanley. I said to Mrs. Keene, I said they should just redux this ad. It's an ad with chimpanzees or whatever in a garage. And they come up with things. We spent $2 million on this ad, and then they said, what are you doing with your money or whatever? But what would they spend now, Paul?
$7 million
for
an ad.
60 seconds.
Yes, absolutely. Yeah,
I don't know. What do you think, Lisa?
Crazy. I'm blown away by the price of these tickets, though. Paul, when you said you went to the Super Bowl before.
I did, yeah. Way back in the day. But this is it's the perfect storm, I think, for the NFL, as I said before, to take, the biggest show to the biggest entertainment market being Vegas. It's just the perfect combination. And I'll tell you, the folks at CBS are just thrilled because they have the broadcast this year. Just by sheer luck, they do a rotation between the broadcasters, and CBS folks are just, because they can just bring all their clients there to, just the greatest marketing event of all time.
And then you have California, who's not far from Vegas, so you have a big influx of people coming for that short trip from California too.
Yep.
So,
but then you just go. Even if you don't go to the game, you just go.
Then you got to pay like $1,000 a night for a hotel.
I think we should send Lisa out there.
I think we should send Lisa out there. We get her my suite at the Bellagio. You'll be all set.
Yeah, should we go? Lisa Mateo, thank you so much on the newspapers. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.